Hello and good morning, listeners. A pleasant morning to dig in some of the market actions with Almus Market Mornings, your daily dose of global financial update, and Shikhar Garg. Now, with inflation in focus, there's been a lot of discussions on oil and energy being one of the biggest contributors of inflation. And oil jumped back up from the support zone on some of the activities towards the global demand, as well as the change of stance by the China pushing in for some demand as well. On the other hand, US strategic petroleum reserves continues to stay on the downward trajectory, hitting the lows last seen in 1983. That's quite a dip that we have seen from 727 kind of a number to 380s is the recent numbers that we are seeing in the reserves. And on the other side, if we have to talk about recession, one of the another big topics of discussion and the kind of expectations by a lot of market participants, German bond markets are giving those exact signals, having an inversion. So JK, I'd like to talk about these points, and I'd like to know about these particular parameters as well from your insights. Thanks.
Yeah, definitely. But let me start with the rupee because that's seeing more volatility now than other currencies. More than the volatility, it has gained and held on to the gains. In fact, despite being at a multi-week lows, USD/INR has not gathered enough steam to rally, and minor rallies have been sold into by the market. Unlike in the recent past, rupee is now moving with the broader dollar moves, and which itself has been on a strong weakening path. So that's infusing a sentiment of the FOMO, fear of missing out, among traders and exporters who have remained underhedged. Levels between 8150, 8160 is a strong support zone which the market respected yesterday. But should we see further breakdown in dollar index on a weaker than expected US CPI, I will not be surprised to see a break of that level as well to put 8090 on the radar. So one should not be surprised by this one-way move by rupee since it's been a stark underperformer for long, and we are just catching up with the broad dollar trend. The reversal to this trend can come from a bounce in dollar index or with RBI's active intervention to rebuild their reserves. Incidentally, India's economic growth rate is expected to slow down to 6.6% from 6.9% as per the World Bank report, which was published 2 days back. On the central bank side, we had the one of the members from ECB from Portugal, spoke a slightly different language, saying that rate hikes are almost over, and it's quite in odds with the European North ECB hawks, and as well as reality, because the market expects another 1.5% increase in ECB rates. Also, putting a slight different spin to the whole thing, one of the new members of the Fed, the Boston Fed, Collins, said that she favors 0.25% hike in February, and she was the only person to be saying so. I think market has slightly not taking that in a very serious note. More attention obviously is going to be a day of inflation today. China, India, and US in that order. Chinese year-on-year inflation has come higher than previous month, while MYM has come flat versus minus 0.2 expected. The rise in price pressures probably owes to the COVID restrictions and supply chain constraints within China. India CPI comes at 530 PMIST and expected to remain mostly unchanged at 5.9%. While sequential decline in the food prices is likely to have a moderating impact on our inflation, focus will be on core number, which even RBI is concerned about its persistent elevated level. Perhaps watched by the whole financial world is US CPI, expected to remain relatively low with all-time index flat and a core just a bit warm at 0.3%. Year-on-year rates should decline both on headline and core. Fed watchers might do better to look into the core numbers, definitely, including the services prices, including housing, which Chairman Powell has been mentioning quite frequently. Definitely the jobless claims data, which is due today, will be relegated to the background, while market will focus on the super hawk James Bullard, who will be speaking later in the day. So market is actually discounting a good inflation number. Equities rallied over 1%, and yields were drifting lower. Ignoring the hawkish statements from Fed members and continue to think Fed could soon ease back on its aggressive tightening after raising Fed funds rate 7 times in 2022. Definitely, the technical picture for major indices have turned quite positive, and with supportive fundamental news, the real rally in stocks could kick in for some time. Shikhar, as you mentioned, the oil prices have rallied 3%, despite the negatives like Russian oil output reduction after imposition of oil price cap, as well as the huge buildup of US inventories. The recent big fall perhaps has discounted these negatives while looking optimistically at the improved demand from China, and also the possibility that this is the time when US will start to rebuild their strategic petroleum reserves. So these factors, I think, should start supporting the oil prices around these levels, around 75 for Brent and around 70 for WTI. In fact, the natural gas prices, which have fallen a whopping 60 plus percentage from the highs, has started to find some feet. So these are factors that we will look at, because Europe still has an inherent issue on its energy supplies, although they have weathered this winter quite positively. Dollar remains depressed with bullish sentiment on euro, yuan, and Australian dollar dominating. But the momentum in euro seems to be waning, and any fresh rally in the single currency inspired by CPI data can meet with profit-taking sellers. Finally, just I'm watching the Japanese 10-year yield, which is again pushing above 0.5%, the upper band of the yield, which is refixed by BOJ sometime back. And in fact, Japanese authorities are expected to widen the band, leading to fresh volatility probably in the upcoming meeting. And they are set to review the side effects of massive easing at next week's meeting. And one of the members said they will review the side effects and also perhaps take additional steps to correct the distortions in the yield curve. And the market obviously will not wait to see a decision. And if market is convinced that the BOJ is trading on a thin ice, then definitely there can be some more volatility in the bonds as well as in the yen. Thank you.
Okay, JK, that was quite good. And yes, folks, it's a day of inflation, and updates are awaited from China, India, and US. And for US, if we have to talk about it, is one of the widely anticipated and watched out number for the financial markets. And it is observed that a lot of market participants will continue to focus on the core inflation, while for India, it may have or we may see the release of inflation data around the last updates of 5.9% itself. But on the domestic currency, if we have to talk about, INR has been holding the gains against dollar quite well, and with the kind of inflation expectations with the market, if there's any surprise, we can also see some possibilities of further down moves, as JK mentioned. And if we have to talk about Japan, like JK mentioned, because there's a lot of discussions around the change of stance by the Japanese central bank after a very long time. So Japanese authorities are further expected to expand the band, and it needs to be seen what sort of an impact does this have. So folks, a lot of things are happening and a lot of data updates are still expected. Let's see how things go by in the financial markets. We shall come back again tomorrow with another round of update, as well as an update on the inflation and how things go about with it. Thank you so much for listening.